Hello everyone, and welcome to today's session for today's webinar, I do beg your pardon, and session where we are going to be looking at what is happening with stocks. I don't think we're going to look at commodities today. I think we're just going to stay with stocks. That's US stocks. So thank you so much for taking the time out to come and join myself and my husband David, who's sitting behind me. I got distracted because I was looking down a list of attendees, and I could see some of you had already been with us for our Forex session, which we finished about 5-6 minutes ago, and I can see some of you have just coming along, joining us for this session alone. Anyway, if you've joined us before or it's your first time with us, it's lovely to have you here. But before we start, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. Trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Okay, now there's there's almost too much that I would like to cover today. So I've made myself some notes, and I just want to walk you through some information and data that I think you really need to be aware of moving forward with regards to the markets. It's such a huge topic, but I am just going to focus particularly on the bond market. The bond market has kind of woken up, and woken up in a way that possibly you may not be aware of it. So it is a complex market, but once you understand the players, if you like, in that market, in terms of the different types of bonds, everything will make more sense to you. Because the bond market is the most powerful market. Everybody's afraid of the bond market. Central banks are afraid of the bond market. Investors are afraid of the bond market, because if you lose control of the bond market, in the sense that yields, start to shoot up, because it is the cost of money. It is what is going to cost individuals and companies as well. How much is it going to cost to borrow? So that's what I want to cover. Before I do that, I just want to have a look at what's happening at the moment, and also look forward to what is happening tomorrow, because tomorrow is a really important day in terms of inflation. We have these inflation, we've got core inflation rate month on month, we've got year on year, and we've also got the inflation rate. And given what the Fed has been saying about inflation, I know it's not their preferred metric. Their preferred metric is something called the PCE, but it is still a metric that I have to pay attention to. This is what is out there. This is what's costing, everything costs more, as it were. So that's tomorrow. Meantime, the markets seem to be, I wouldn't say they're exactly in party mood, but there's a very big disconnect between what is happening on with the markets generally, and by the indices and by the stock markets. They seem to be kind of ticking higher, and I know David will just pick up on the daily charts, just to see whether this rally that we're seeing, or these rallies, whether there's anything sort of, some authenticity to it, as it were, or is it just another, is it just kind of trying to suck people in? Having a look at the VIX is fairly subdued, actually, at 20. That's the US 30. That's for the Dow Jones, and I think the Nasdaq is up as well. Yes, it's. I wouldn't say it's. Let's have a look if I've got the daily chart. Yeah, it's kind of, it's kind of moving higher. There isn't a great deal of momentum. There's no. I mean, certainly there's nothing like that we saw under this candle here, where we had a seemingly quite a lot of volume go in. But the volume generally on the up candles, these big up candles here, it's not very reassuring. I think that's the best word that I can use for this. And the reason is, if you understand what is happening in the bond market, you will know the reason why. And the bond market, what is happening there, it also has an impact even if you're going to be, day trading stocks, if you're going to be day trading the kind of stocks that benefit from a positive positive sentiment, and sentiment is cratering all around you, that is also going to have an impact. And the bonds, this is called, it's known as the canary in the coal mine, and it is it's an ETF, and it's the HYG. I've actually got General Motors up here, and there's a reason for that. HYG. Let's have a look. HYG iShares. This is the one. Okay. This is an ETF for, as I said, high yield debt. They're basically junk bonds. As I said, bonds are the cost of money. How much is it going to cost you to borrow, as it were? Let's have a look. Here we are. This is what I want to show you. TradingView. I love TradingView, but I'm always having to rearrange my chart. Now this is high yield corporate bond ETF. This is made up of companies that don't have AAA status. So when they want to go out into the market and borrow money, it's going to cost them more. And as investors, all these bonds are bundled up together, and this ETF has been created, and you and I can go and invest in it and buy the bond. And what that gives you is, because the companies have had to pay more to borrow money, it offers a higher yield. And if you think about it, since 2008, the whole, with zero interest rates, negative interest rates, the whole, if you like, focus of investors is a search for what we call yield. If your bank account is paying 0.01%, well, it's awfully interesting, and inflation is whatever, it's not going to do you much good. So, but with the high yielding bonds, there is a bigger risk. And people in the know, traders who know what they're looking at, in terms of, they look at the market more holistically, and they put together, what is happening in markets maybe that they're not trading in. And for those of you, I know there's some of our forex trading students here will understand what I'm saying here. There are these four capital markets that we have: equities, bonds, commodities, and forex. They are all interrelated. There are relationships between these four capital markets. There are relationships within the markets, and once you start to see how they interact with one another, you do some cross-market analysis, and answer, where we are in terms of sentiment will come out. You have to be a little bit patient. This is not going to happen immediately, but it kind of is setting the scene for the future. And this is the one, like we look at the VIX for volatility and for sentiment, the HYG is the perfect instrument to go and see, really what is happening underneath the hood of the market. And we can see here, what is the most interesting thing about this chart is, if we look at the level, or the volume that is underneath here. This is back in March 2020, when obviously everything cratered in March 2020, so there's no surprise to see this massive gap lower. And with the pickup in equities, and I wouldn't say pick up, even despite the pandemic, the markets have been going higher, so people have taken on more risk, which is why you see this rising higher. And it didn't quite get to the level, it just got to about the same level as pre-2020, and then it's really been moving sideways. We've had this very strong recovery in equity markets, but it hasn't really been it hasn't translated into the HYG. And what this is telling you is that there is, I wouldn't say there's fear at the moment, but there is this concern that central banks, are going to have to raise interest rates a lot quicker than they say that they're going to do. That inflation, it is going to run, that they're not going to be able to. They think they're going to control it, and maybe they're not going to control it. Now, this is actually what I would say, though, is from a volume price analysis perspective, this is anomalous because you have these small candles here with a ton of volume underneath it. So it is interesting that whilst you have a lot of volume under here, if we look at this candle over here with almost the same amount of volume, you see you have a much deeper spread candle. So all I'm saying is with regard to market sentiment, yes, we look at the VIX, but the VIX is kind of behaving in I wouldn't say in an odd way, but to me, do you think so, David? It's not doing what it's supposed to do. And sometimes you have to go beyond and look at another market, and the bond market generally is the one that everyone now has to focus on. And the other reason for mentioning this is, as you know, David and I are working flat out on putting together our program for stock trading and investing, and we've already done a huge thing on bonds for the Forex program, but we've actually expanded it out a little because within the bond market there are all sorts of different types of bonds. And certainly for stocks, because then it also includes ETFs and understanding how bonds are bundled up together and then sort of not just sold individually, because you can buy a bond from a company that maybe doesn't have a 5-star credit rating, as it were. What most investors and even traders, they look at the ETFs that are representative of that section of the bond market. But it is, what I would say also, it's quite an illiquid market. And to me, for us, understanding what is going on in the bond market in all its variations, as I said, with high yielding, there is the opposite of this, which is the high grade, which is sometimes called high quality paper, because companies go out and borrow money, they issue bonds. Apple had a bond issue a little while ago. So if you didn't want to own Apple stock, but you could own an Apple bond. Is Apple maybe better than why is it different from a company that comes under the category of junk status? And the reason is, well, how much money do they have? Do they have a war chest? Is Apple going to default? It's no different to when you and I want to borrow money on a credit card. Some people will get a better deal on the interest than others, and it all goes back to your credit history and your status. And it's really no different with bonds. But a lot of money has gone into high yielding, as I said, these types of bond, simply because of that, because people are looking for high yield. Right. So we were going to focus today on looking at how to, from a trading intraday perspective, how we look at how we try and identify a momentum. So when we have a stock, and how do we know it's going to move, as it were? Well, we're going to show you a particular indicator that David and I have that we developed as part of our quantum trading suite of tools, which, in case you're interested and in case you're not aware of, you can find details over at quantumtrading.com, and it's actually called the tick speedometer, and it measures the activity, the tick activity, to give us a clue as to whether there's a bit of oomph behind this particular stock chart that we are looking at. But I just want to scroll back and go back to, as I said, one of my favorite screeners. I'm not going to do a general screen because I've already done it and the market's open anyway. And I picked out two things I picked out. First of all, I wanted to revisit a couple of stocks that we looked at way back in November when we were looking at screening. In fact, I will just do a screener very, very quickly. Here we are, just to refresh our memory. Basically, let's take any one relative volume. Let's go over 1.5 current volume. Now, those of you who come regularly will know I say over 1 million, but actually what I really want is I really want to see what we call the unusual volume. So I've actually gone over 5 million, and I want to see what that throws up and what that throws up in terms of in the context of the chart. Is it at the top? Is it at the bottom? Is it sort of in consolidation? What is it doing? And these were the kind of numbers, you know, that it's throwing out, 10, 18, and as I said, I mean, Facebook is a classic one because it created last week, and there's a lot of, you know, now perhaps the perception that it is cheap, so it's got 18 million coming in. Robinhood was another one that we saw. We talked about it a little while ago. We saw the buying coming in 5 million, but I was really looking at the big numbers. And those of you who maybe were in about November time, I did a screen, and what really looked quite interesting was a huge amount of volume was going into the auto parts sector. And I thought, oh, that looks interesting. And in fact, we picked two out. We put RMO, which is a Romeo Power, and it was about here. This huge amount of volume. Can you see it here? You've got this massive volume spike. I can't remember it was like, well, here we are. It was like 26 million. If we look over to the left hand side, it's got the sort of million. And I looked at it, oh, okay, because we look in volume price analysis, volume is the thing that we look at because it's going to determine whether any trend that we see is a genuine trend. It's a healthy trend. A healthy trend is one where price action is going up and it's supported by volume. That doesn't mean price doesn't go up on low volume. Yes, it does. But it's just, you think, you know, it's not, it doesn't sit right. It doesn't mean the price, and people, and the questions I get asked, well, how come it can go up on low volume? Well, you know, you're a market maker. You make the market. You just mark it up. You know, what do you care if it's, you know, no, that's it. I'm selling. You know, you want to buy from me. I'm going to quote you a price. It's as simple as that. So we're always on the lookout, you know, certainly on a trend that it is supported by what I call a healthy trend. Doesn't mean you can't have a trend on so-so volume, but as I said, it's, you know, to get as much certainty as you can in this uncertain game, you want to see rising prices with rising volume. Now, this was one that we picked out, and you can see here this massive spike in volume. The other one was a company called LCID, which was Lucid, same sector, auto manufacturers, again back in November. And we can see here, again, I think this is even more volume, huge amount of volume. But the reason I highlighted these is the volume spike is just one signal. And we do then have to be patient, because can you see what happened next? Those of you who come along will understand about anomalies. You have this amount of volume. What happens to that candle? Nothing. Very, very little. Nothing happened. And in fact, it rolled over. So it's an anomaly. So when you see it, and it's also a lesson in when you see a signal, you have to wait and see what happens next. But with LCID, it was the same day, I think. Here we are. We had that signal, a much wider candle. I appreciate there was a wick to the top of the candle, and you certainly wouldn't go off on one signal, but it did in its own way, if you like. It was a bit gappy, a bit of a messy, I wouldn't say it was an ideal trend, but it did actually go higher. And what's interesting is then what you then look is you look on the corrections and the pullbacks. You see Well, what happens to the volume? Does it increase or does it decrease? If it decreases, and we even got a little gap down there and what have you, but it kind of, what I'm trying to say, it held up. There's a little candle there, fall in volume, then it goes higher. We have another little gap higher. As I said, it's not an ideal trend by any stretch of the imagination, but it's what you need to look at when you see these signals, i.e. with unusual volume. So if you are going to use the screener, go to FinViz, it's free. I know I've said 1 million, but go and put some ridiculous amount, over 10 million or something. Then go and see, well, what am I looking at? So, and just wait, be patient, see how that volume plays out, and bear in mind the difference that we've seen in these two stocks. Now, we're talking about momentum because the next bit of the equation is, well, yeah, that's awfully interesting, is we want to have some kind of metric on, well, are we going to get some movement in here? I know we have beta, there's no beta here, but the other couple of things is we can look at the ATR value, which is the average true range. And if this is a nice, positive high number, that is going to tell you maybe it's, it is going to move a little bit higher. And I have to confess, for some reason, this has suddenly appeared on FinViz. It's a volatility score. I cannot find, I'm going to actually contact them and say, how did you come to this volatility score? 7.6, 7.8 to 8.9. This is the first time I've noticed this. So I am going to ask them because I'm curious, and it's actually quite interesting because it ties in quite nicely with the work that David's been doing on volatility in the options market and implied volatility. And so it's, because what we want to try and do is, yeah, we can select a stock. Yeah, it meets all the criteria. But if it's really going to take a long time to move, and especially if you're trading on a very short-term basis, you want enough momentum in there. You don't want it wildly over, volatile, but you do want it so you don't have to sit there, twiddling your thumb thinking, oh my goodness, because the worst thing you want to, the position you want to be is you want to be sitting there twiddling your thumb, hoping, oh, come on, move, because we then get bored and then we do things that we shouldn't do. And the stocks that I did pick in my screener earlier today, these ones, and I'm actually going to follow them up next week. This is the one, it's BHG. Again, because of, this extreme volume seems to have come in. The other one, which I also saw, this was the HYG that I had on Market Beat. As I said, the volume coming in there, but that's very much tied to what's happening in the broader market. And what did I have as well? And the other one I chose was, in fact, General Motors. Let's go back to my General Motors chart. Yes, I know, a name from the past, isn't it? Okay, and what I've done this time is, let's have a look. That's that one. That. What I've done is I got a stretch it out a bit so I've got them both together. Let's have a look. Oh dear, it's too far. Where are we? As I said, a Trading View, nice, really nice platform and everything, but 22, 21. General Motors. Let's have a look. Was that 4th of January? 1st of June. Oh, doesn't help. I've got the weekly chart up. Well, that's a bit stupid, isn't it? Right, I'm almost finished, David. I'll pass over to you.
No, it's fine. Just roll on at the end.
Okay, right. Apologies about that. To be honest, if any of you guys use Trading View and could tell me how I can avoid this all the time, I would be eternally grateful. because I'm having an absolute, as I said, it's a fantastic platform. It really is. I pay for the premium version, and I can't tell you the joy of having data coming through when I want it and what have you. But I'm constantly having to resize things. I think David's probably got a better handle on it than I have. Perhaps I should just practice more. Okay. This is what caught my eye on my screen in the amount of volume that suddenly sort of popped into General Motors. I know General Motors and Ford as well. I think they're moving into electric vehicles and what have you. But what's interesting about this daily chart, I've got the top chart where we've actually got our indicators on there with the key levels. I've got the volume point of control, and as I said, I've got the accumulation and distribution indicator, which is these hash lines here. And the beauty about the accumulation and distribution indicator is basically the more times a level is tested and holds, the thicker that line becomes. So therefore, when it is breached, it will provide a fantastic level of support, obviously to the upside. For the downside, the more times it is, it is tested, you're going to get a nice sort of downtrend. And we can see here, make sure I've got the same. Yeah, 4th of January. I've got these two candles. I've actually got a really nice 2-bar reversal. If you overlay that across there, you actually get a really nice shooting star with a ton of volume underneath it. So that of itself, without anything else, should tell you that the chances are this is going to roll over. And in fact, it did. It rolled over really very nicely. Back on the version of the chart where I've got my indicators, both of these candles triggered the volatility indicator because that piece of price action was outside of the average true range for a GM on this particular day. It's this. What then happens, you either get congestion or a reversal. We actually got a reversal, but lo and behold, the next day, we got another volatility candle. So, and even so, as I said, by overlaying one on top of the other with the volatility, that's like a massive shooting star over 2 days on volatility. That's pretty much, tells you you're going to get a reversal. And then also you are at this point of you've got this strong then became resistance line. We've also got the volume point of control. We had a little bit of sideways movement. What was the volume underneath it? We had a lot of compression in the candles, but it really wasn't, it was kind of a bit of a battle. It couldn't go one way or the other, but it's at the volume point of control, which is, if like market is happy to transact at that point. And in fact, it's been a break away trade from the volume point of control. We can go all the way down. We can see the volume rising, which is exactly what we want to see. As I said, this would be considered a healthy trend. Now, the next point is, well, where is it going to? This is where your support and resistance comes in. It kind of stopped at 53.32. This is, as I said, it's a strong support. Why? Because the line is much thicker. I think we've got a little bit of a gap down there. We had some buying coming in. We know it's buying because we've got a wick to the bottom of the candle, and we had another sort of little effort to rise. But the next candle, you've got, I wouldn't say you have as much volume that you have under there, but if this is going to reverse, you want to see a bigger range candle than we saw here. But no, if we take that to be our primary trend lower from the volume point of control, you had quite a lot of volume under these 3 candles, middling under these. We've actually had earnings, and so it's continued low. Now we're getting another effort. It's like another effort to rise with GM, but this kind of, as I said, this extreme volume, moving it back to this point where we had this extreme, I didn't pick it up the first time, I accept that. We had this extreme volume on this 2-bar reversal. We've got this extreme volume coming in again on a very compressed candle. It feels more like stopping volume. It's just an interesting chart because what you're seeing on this chart will be replicated on, on another chart in another time frame. And just to put it through, let me just go and check what they give for the ATR on yeah, they give an ATR of 2.55. I said I've got to check out what this volatility is, but hopefully I'll have an answer for you guys next week. But there is at least a degree of movement in this particular stock. This is definitely stopping volume because you've got a nice wick to the bottom of that candle with a ton of volume underneath it. And GM, you know, maybe it's going to be back a sort of superstar again, primarily because it's like all car makers. It is, you know, now going back to taking on Tesla basically, and Ford as well. And we can see here we've got a much a longer view of where the stock has been. I think at one point, as you can see here, it was down at $15. Right. Now we're going to apply that to day trading, and this is just your screening and having a look at how we can use our tick speedometer to actually take that one step further. Is that okay, love? I've just got a question quickly. Oh, fantastic.